Our latest outing takes us to a small town in north of Lincolnshire called Brigg, where I went to see local Labour MP Ian Cawsey, as he believes the cause of the credit crunch crisis is more of a universal problem rather than just the fault of the central government. What assurances are the central government giving people to encourage them that we will actually get out of this recession quickly and with actually minimal casualties?
I think the government's policy is quite clear, and that is to try and ensure that whatever the impact of the global credit crunch is on the UK, then the UK goes in as late as possible into recession, comes out as quickly as possible, and is as shallow as possible.
What words of encouragement would you give to someone that's maybe recently been made redundant?
I think the first reassurance is we want to make sure that you keep the family home, keep the family unit together. The second thing is, well, what is it you want to do and what are the jobs and opportunities that there are? Because then that often points people by way of the training that they need if it is going to be a career change into something else. And if you think some of the big employers we've had around this area over the years has been steel, has been agriculture. Now neither of those industries employ anywhere near as many people now as they used to 20, 30 and more years ago. So we're quite used to this, having to retrain people into different skills for the different jobs and the new opportunities that come up. And one of the things we're determined to do through this recession is to spend money on training people so that Britain can attract the employers and local people can get the jobs.
Okay, you talk of people losing their homes. I think the Council of Mortgage Lenders recently announced that 40,000 people lost their homes in 2008, with 75,000 people expected to do so this coming year. What would you have to say to people in that current state?
Well, I think the first thing is to try and stop them reaching that position. Even though we're in difficult times now, we are nowhere near the level of repossessions that we had in the 1980s, and that's something we want to protect. Now, there are people that, for all sorts of reasons, get into a position where they can't keep the home. And I think in that situation, there's lots of support, usually from the local council, in terms of ensuring that alternate providers have. Not everybody has to buy a home. Lots of people choose to, but there are alternatives.
Have the government proceeded with quantitative easing at a strategic stage, or should they have perhaps maybe done it a bit earlier?
Actually, the argument wasn't so much timing. If there was a criticism, but this particularly came from the banker who was on the panel, it was that 75 billion, which of course seems like an enormous amount of money, might not be enough.
Well, he did raise, expect to give permission for 150
billion. It may well grow, but I think the interest rates, fiscal stimulation, quantitative easing, these are the steps, and I think what you will see is you'll see certainly the developed economies of the world taking very, very similar actions. They sometimes call them slightly different things, and sometimes they wrap them up in different ways. But in general terms, it's about making money cheap, it's about making money available, and it's about stimulating it when it's out there into the economy so it does things and protects jobs. And those are the three essential steps that will get Britain and the world out of recession.
Do you believe that the government's decision to nationalise the commercial banks will at all impact upon their confidence and maybe make them complacent in future when giving out subprime loans like they did before?
Well, I think it is an argument the other way. There is an argument that basically says, look, you have to teach these people a lesson. I don't subscribe to this view, but I understand it. And that is that you have to teach these people a lesson. And the way you teach these people a lesson is you let them take the consequences of their actions. And actually, if you just come along and tidy it all up, they will then think, well, actually, we don't have to do anything different in the future. But that is why future regulation. Now, if you were to say, where is the government complicit in all of this? I would say, and it's not just a British phenomenon, I would say that governments generally have had too light a touch on the regulation of financial institutions. There was always a view that these guys knew what they were doing. Of course you had to protect against fraud and swindling, but in general terms the system could look after itself. I think where we are in a different place now is that what you will see is certainly in Britain, but I think you will see it everywhere, there will be much tighter regulation of financial institutions in terms of what they do and who they lend to. So in other words, it's not a money for nothing approach. Yes, they do get the support, which enables them to stay functioning as banks, enables them to get money out into the economy, into individuals, but they will be more tightly regulated as a result. So actually they won't have the freedoms to go and give money to high-risk lenders, loanees all the time. They'll have to go through a system of rigorous checks.